All right, we're close enough, so I'm going to start it up. Okay, this is the Endeavor webinar. We call it the Endeavor because we're all endeavoring to get better. It's for advanced training for live room and fast track traders. Okay, so don't forget that nobody's told you can make $3 million in 2 weeks in here. The possibility exists you could sustain a loss of some or all of your initial investment. Therefore, you should never invest any money you cannot afford to lose. Be aware of all the risks associated with foreign exchange trading and seek the advice of an independent financial advisor if you have any doubts. So all ProAct Live sessions are recorded, and as a reminder to our fast trackers, there are also live room subscribers, and tonight we have about a couple of hundred extra subscribers, extra people who are visiting us. So we are not going to talk about any of our proprietary trades. They're not discussed here. That's what market analysis is in the morning for, okay? So here's the deal. We cannot expect a different result if we use the same behavior. That's the definition of insanity. So we have to change our behavior. If we're not being successful, then we have to change our behavior. And that's very difficult to do, number one. And number two, most traders teach themselves to trade bad. Okay, and Pat, if you're having audio problems, it is on your end. It is not on ours. We're using the fastest internet speed we can have. I'm not on in this call on a computer. I'm on a RAID server. All right, so it's not on our end. It is on your end. So everybody, if you have problems, the best thing to do is log out, log back in, and maybe you'll get a different channel on the internet, and you'll be fine. All right, there you go. Thank you, Pip. All right. So our first step is we have to recognize our problem. If we're not successful, we've got to recognize that. Number two, we have to isolate those problems. So how do we do that? We journal all of our trades. I don't want to journal all my trades. It's a lot of work. Journal all your trades and you will see a pattern. The pattern tells you where your problem is. All right? So chart analysis is the cornerstone to confidence. Without it, you are never sure of your trade. You don't know the areas where you should not even put on a trade, okay? That happened this morning. You heard lots of traders going, you got so many lines in your charts, it's so messy. And every one of those lines is an area where you do not put on a trade. But if you don't have those lines on the chart, what do? You trade right into it. It bounces off the line, pops up 35, 40 pips, stops you out, and you take another loss, another doggone loss. The doggone broker stopped me out again. No, you haven't done the work. You won't know the weight of the trader's bias. Are they buyers or are they sellers today? Exactly right, Steve. Are they buyers or sellers today based on the structure of the market? All right. So how do we remember what we want to do? New traders, pay attention right here. This is what we want to do every day. We want to trade for pips daily. Trade for pips daily. Is that not what we want to do? Absolutely. Well, this is an acrostic, and everything that every one of those initials stands for something we have to know. The T stands for the trend. All right, we have to know the trend. F stands for the fibs, not just big picture but small picture. We have to know the P, the PSRs, previous support or resistance. And we have to know if divergence is in the market. Divergence tells us that the end is near. All right. So what do we got to know every day? We got to know the prevailing trend. Okay. What is that? And what is the trend of the day? Because it could be opposite. What do I mean by that? You have an uptrend and the market's moving this way. All right. That means the prevailing trend is up, but the trend of the day is to the downside. All right, that's what you got to know. Does that match the structure of the market? If you don't know the structure, you don't know where you're at. All right. PSRs, they are found only on the 240 world only. PSR stands for previous support or resistance. All right. Fibs, we got to know the big picture fibs. That's the 240 world, and we also have to know the small picture world because we need a roadmap. That's the 60, maybe even the 10 or the 15, all right? So, hold on just a second. I got a private message here from Pip. We're seeing so, yeah, I've got an email I want to show in there in a minute, Pip, so if you can hold on for a minute. Hopefully we won't have any more of those, all right? Is divergence in the market? The end is near, all right? Now, we use the HSI target. Okay, the HSI is a tool we invented to find confluence and waves. All right, it's proprietary to us, but let me tell you, it's not that big a deal. It is just doing the work that you should be already doing. All right, it's kind of like when you use a fib tool. All right, you use a fib tool. Why? Because it already pre-calculates stuff you're supposed to know. All right. Now we use the HSI because it's calculating stuff we're supposed to know. All right. And patterns that are influencing the traders. Do we have inverse head and shoulders? Head and shoulders. Do we have bear flags, bull flags? Do we have rising wedges, falling wedges? Do we have symmetrical triangles? Do we have pennants? All of those kind of things influence traders for the day. Our job as traders are to know those things. All right. So our last lesson, we'll do a quick review, is to explain consolidation for us and why do we even care. And number 2 was how do we properly use a scalp. So we're going to quickly go through those. It's a previous lesson, but we'll do it here, okay? So here's consolidation, okay? Consolidation is when the market is doing this sideways move right here, okay? Now, this is called the pole, all right? The pole is a flag. You see this? It's like this. That's a flag. You see that right there? It's a perfect one right there. All right. This is consolidation, but the bankers do not call this consolidation. What do they call it? They call it accumulation. They are accumulating traders' trades for the move up to the upside. All right. They want to own all these traders' trades because the more trades they own, the more they're going to whack the dumb money. That's all there is to it. It's just business, folks. I'm sorry. All right. So they are taking sells, they're taking buys, they're taking sells, they're taking buys, they're taking sells, and finally the market breaks. And when the market breaks, we get a break, hook, and go. Why do we get a break, hook, and go? Because of consolidation. All right? Consolidation means that the big boys have got all these sells which are going the wrong way. Now, they're going to make money in all those sells right there. All right? They're going to make money on them, but the first thing they got to do is get them out of the market. So the first thing they do is break up and hook back. All right? We have 2 here. It wasn't enough. There's 1 here and 1 here. 2 of them. Consolidation creates break, hooks, and goes, and if they don't go, they'll do it again, and then you'll get the move. Now, whatever they did here is what they're going to do up here. All right? You can measure it almost always. It goes almost to the pip. If this is 150 pips here on the consolidation breakout, they're going to do 150 pips here. Why? Why will they do that? Because bankers are mathematicians. Bankers like the books balanced. All right? So the books get balanced because they're able to understand the market. They create the market, but we have the opportunity. If we know this was 150 pips going in, we know it's going to be 150 pips going out. We don't get snookered in this area of consolidation. We don't get stuck in here, which is why we exit trades after the market. When the market, we don't take trades at the end of the market because the market has a tendency to consolidate in between the markets. All right? We do not want to get stuck in a 45 pip range. All right? This is on a 30-minute chart. I'm just showing you an example. All right, Jenna? They could happen on a 10-minute chart. They could happen on a 30-minute chart. They could happen on a 60-minute chart. The bigger the chart, the bigger the range. All right? So good question, by the way. All right? The point is, we don't care about the range. We care about the breakout of the range. All right? So consolidation sets up a great trade. All right? If you're willing to wait for it. How many of these do you get a day on average? Anybody know? 3 per currency. There's Pip's got it. 3 per pair. All right? Every time the market closes, it consolidates. All right? See? Now, and the market reacts 78 to 90% of the time, whatever direction you went into the consolidation. All right? 70 to 98% is the direction you're going to come out. 78 to 90%. Now, let me give you this example here. Most of you cannot trade at 78 to 90%. All right? Now, our fast-track traders can trade at that level, but most traders cannot do it. All right? And here you have a trade setup that works 78 to 90% of the time, which is better than you can trade, and the average trader doesn't trade it. Or even if they do trade it, what do? It goes up, and they get 10 to hold up 12 pips. Oh, it's coming down. I'm clicking out, clicking out, and they're out, and they missed that move right there. You see that? They miss it. Why? Because the average retail trader takes 5 to 8 pips out of the market. That's the average. Listen, it's not me telling you. I've been to FXDD in New York. I've been to them. I've talked to them. I said, what do the average retail trader get? They said 5 to 8 pips. All right? You can go over to Forex Factory or Forex Junction or somewhere else and see what do they actually knock down for pips. It's 5 to 8 pips is the average retail trader's trade. All right? And the professional traders know this is going to happen. They don't get 5 to 8. They get 50 to 80 or 100 pips, whatever the market is. All right? All right. The stop is easy. The stop is right here. It's always about risk and reward, Chuck. All right. Your stop is always the last support or resistance plus 5 to 7 pips. So there's always your risk. If you know what this is, you know what the risk is, you know what the reward is. It's so easy. It's like taking candy from a baby. But what ends up happening? Retail traders, first of all, don't know about it, number one. Number two, they get caught in the consolidation, all right? Because why? Because they want to make a stupid trade. I got to make a doggone trade.
You push the button. I ain't telling to push the button. Did you tell him to push the button? Nobody told him to push the button. I didn't tell him to push the button. You didn't just go push the button. You don't go around pushing straight buttons. I tell you, don't push the button. You
don't push the button, all right? So here's the deal. Advanced traders take every trade off the bottom in consolidation. Every trade they can take off the bottom. All right? New traders don't do that. What do new traders do? They take the break, the hook, and the go. That's what new traders do. And even if you missed, if you got the first one, all you had to do is stop it down here below here, and you make it through there with a normal stop, and there's your risk, and there's your reward. You see that? And we look for these every single day. All right? Anybody got? This is a review of last week's lesson, so we're not going to spend any time on here. I just want to see if anybody's got any questions about that. You use an entry order, Dave. Good question, Dave. Probably 80% of our trades are entry orders, Dave. 80% of our trades are entry orders. They're not market orders. All right? We can't be in. We're target traders, which means we cannot be in front of the computer 24 hours a day when the market moves. But we can figure out the move because it is consistently going to do the same thing. It's about statistical probability. All right? If you have consolidation here, you know that a break to the upside is going to break, hook, and go. All right? You simply stop it here, find the target, and you make that trade right there. All right? No, we'd use limit orders would be different. It's an entry order. A limit order is an entry order, Andre, but there are four different entries. All right. An entry order is a buy limit, a sell limit, a buy stop, or a sell stop. So 4 of them. All right. So all right. Good, Amanda. Thanks. Entry means pending. Thank you, Charles. Good way to look at it. Okay. So you take the trade on a market order after the hook is complete. That's correct, Michael. Break and a hook, and then you take that trade right there. You take it because of statistical probability, not because of a oh my gosh, I got a moving average crossover. That ain't going to work for you. I'm going to tell you, it's not going to work. Absolutely. If we got a trade that's going to go to, we're target traders. If we know it's going here, I don't care if it takes 6 hours or 16 hours, I'm going to make it the trade to here. See, as a target trader, it's a paradigm shift in your brain. All right? What happens to traders is that they get so used to getting a trade, goes up 15 pips, they click it out, and they go, wow, I'm a winner. All right? You just won the battle. You just lost the war. All right? No, you enter on the hook, Ian. You just lost the war. Why did you lose the war? Because you traded for 15 pips. When you trade for 15 pips, you got to be 85% right for the rest of your life. Is it realistic for you at your skill level to be 85% correct for the rest of your life? And the answer to that is absolutely not. All right? Now, when you have a trade that has a 70 to 90% chance of breaking here and going to here, 70 to 90%. Why would you be scared? That's better than you can trade. See that? That's better than you can trade. See, I'm just showing you an example here. And we do these thousands of times, okay? Thousands of times, all right? All right. I'm talking about the first consolidation at the bottom. Yes, Chuck, because we have $5.9 trillion a day, Chuck. $5.9 trillion a day. Do you know how much the stock market does? 1.5 billion. Oh, excuse me, 150 billion. 150 billion is the average New York Stock Exchange a day. 150 billion. Currencies are $5.8 trillion. So what happens? That means the market moves, and it moves 24/6. All right. So, Helen, when you become an advanced trader, you take every one of these on the bottom. In the beginning, you don't do that. All right. In the beginning, you only take these. It's a matter of working your way up the ladder. Okay. When you work your way up the ladder, you're going to wait for the break, hook, and go, because this could consolidate for 2 days, right? Okay, let me pop this down. Hold on a minute. Hold on just a second. Let me try to pop that down. Is that better? All right, good. All right. But this is a PowerPoint. That's the problem. Okay. All right. Let me go back to here. All right. So I don't want to get. This is last week's lesson. So I'm not trying to get bogged down here. I just wanted to. I want to review it. Okay. All right. So consolidation is a big deal. Why do we care? Because it sets up a 50 to 90% trade. It's always better if it's square. Okay. If it's not square, it's squaring downward. It's not a pole. It's a flag, Davis. Okay. Then it becomes a flag. All right. All right. Now, the other thing we were talking about last week was how to use a scalp. All right. Now, let me review this for just a second. Hold on just a second. Let me end the show, get this back up where I can get at it. All right. God damn it. I hate when I lose that. Hold on just a second. God damn it, drive me crazy. Hold on. I'm losing my little drawer here, and I need a drawer. There's my drawer up there. Why can't I get this up there? Let me just do this for a second, rather than show you that. Okay, can everybody see that? Okay, it's not as big. Andre, everything. If we're online, if you had to be here earlier, you would have seen everything we do on live. If we're live, we're recording. All right. All right. Now, let's talk about a scalp for a minute. We just talked about a scalp last week again, right? I talked about it briefly this morning. A scalp is just why do we call it a scalp? All right, if you're in the United States, you will understand this analogy, but if you're not in the United States, this might not make sense. So think about Napoleon or something like that at Waterloo. All right, in the United States, we had a guy back in the days of the Indians, and his name is General Custer. Now, General Custer was over in South Dakota, and he was in South Dakota, and he was old yellow hair, and he was hunting Indians. And he was sitting on one hill one day, and he said, you know what, I'm going to go on the other side of this hill, and I think there might be some Indians there. Well, what he did was he drove over to the other side of the hill, and all the Indians in the whole United States were sitting there, and they wiped them out. Everybody in his whole platoon was killed. He was a very famous guy, right? But everybody was killed. Why? Because he didn't send a scout out. What is a scout? A scout would have been a guy who he sent out to say, see if there's a bunch of Indians on the next hill. When the scout went out to the other hill, right, he would have gotten shot full of about 5,000 arrows. They'd have put him on the saddle and hit the horse and sent him back to Custer. Custer would have gone, oh my gosh, all the Indians in the world are on the other hill. I'm going to go the other way, right? So a scout is the same thing. We enter the market by stepping our foot into the market with a small position. All right. Now, how do we do that? We take whatever we can trade. Okay. Now we trade 2% of our account. All right. Don't forget that. No more than 2% of your account as a beginner. All right. 2% of your account. We divide. If that 2% equals $100, okay, $100. That means that we could trade 3 minis with a 33 pip stop. Everybody understand that? Okay, I'm going to stop right there. So everybody's got to understand that. All right, 2% equals $100, which is 3 minis with a 33 pip stop. All right? All right. Now, a scout is putting 1/3 of your lot in here. 1/3. All right? Now, I have 2% I can risk. Therefore, if I was to put a scout on 1/3 of my lot with 3 times the stop, 33 times 3, or over 90 pips, will I get stopped out on any little pullback in here? Will I get stopped out? Sorry, micros, yeah. No, not likely. And here's the deal. If it ever starts going wrong and I realize, you know what, I am absolutely wrong on this trade, I will click it out. Right? I will click it out at 47 pips, 52, 37, 61. Whatever it is, it ain't going back 90 pips because I'm a trader. Right? But if the trade begins to go my way, I find ways to put these other 2 lots into play. So the first trade is a scout with 3 times your stop. It does not break your margin management rules because you have not broken your 2% range. Right? Now, that forces you, because you'll never make any money on only 1/3 of your lots. What does that force you to do? Find a way to put the 2/3 in, which means you press your winners without exception. Right? Once it proves that it's going to go, you begin the process of adding to that position. And as you can see on this little thing, we did this trade, by the way. All of our fast trackers did this. Is the Aussie dollar. About 3 months ago, we made this trade starting with a scout, and we pulled about 750 pips out of this trade. Right? It's not a scalp. No, we never do that because the first in is the last out, Randy. All right? We find the target, wherever that happens to be. That first trade is going to that target, wherever that is. All right? That trade does not come off until we get to the target. Now actually, Matt, that's not that big. Amanda's here tonight. Amanda, tell them what your best trade. What was your best day last week? This is a brand new trader. Amanda will tell you. All right. Amanda, tell them what your best trade, your best pip capture was in 24 hours last week. All right. You're not going to hear from me. You're going to hear from her. I know she's here. Amanda. 1,252 pips. All right. There she is. All right. How many of you on this call have made 1,252 pips in one night? All right. She's not the only one. All right. She's not even close to the only one. All right. So what we do works, folks, and it works for big, big, big pips. All right. See? But you've got to learn how to do it. That's it. So the scout allows us to do that. We go into a trade, sticking our feet in the water with 3 times the stop. But we will never, ever, ever let that thing go back 3 times. All right? Once it starts moving in our direction, we start adding, we start adding, we start adding, we start adding, we start adding. And by the time we get down here, we had about 15 positions on. All right? 15 positions. And that thing, these are all T30s, so that went 1. That went 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 pips. Okay, 10. That's almost a 300 pip move. All right, we had 15 positions on there. The first trade made 300 pips. You see that? The first trade made 300 pips. The second trade made 275. The third trade made 245. All right. If you trade a standard lot direct, it's $10 a pip. Yes. If you trade a mini account, it's $1 a pip. If you trade a micro, it's 10 cents a pip. The good news is that as a newbie, you can trade with 10 cents and learn to make pips. All right? Learn to make pips, and then you can learn to make money. Once you know how to make pips, you can learn to make money. All right? And we do not count the multiples. Although last year we made 40,000 pips in our room, 40,000 pips, we only counted one lot. We only counted one lot. We never counted the multiples. All right? Well, I don't know how much you had online. So anyway. All right. So that's what a scout is. Everybody got that? That's just a review. We're not here to talk about that. That's last week's lesson. I want to get to this week's lesson. All right. So, all right. So we're going to review. We're having lots of questions on trends. And in fact, let me pull up this email I got. Hold on just a minute. And here it is. I got an email from one of our traders. It's from Steve. Steve's here tonight. And he said, I know tonight's class is on trends. I was going to pass because it's not something I struggle with. Then I came across the AJ trend question. Which one will you go with? Okay, so see, trends are a problem. All right? So here is what Steve sent in. He said, is it this or is it this? All right? So it's a valid question. All right? Which is the trend? All right? Which is the trend? And the answer to that is we only care about the last piece. We care about what they're doing now. All right? This is what they're doing now. This is what they did last week. This is what they did the week before. We care about what we're doing now because we're going to trade now. All right? See that? What are they doing now? All right? I don't care what they did last week. Yes, I do care what they did last week, but in terms of trends, I care what they do now. By the way, all of you should be in this Aussie dollar. We're up a few pips now, about 25 pips from this morning. All right, so that's a nice trade. Aussie yen also, we're up a few pips on this Aussie yen right here. It's right here trying to make this break to the downside. All right, so we're going to go do some trend work here. All right, so let me go, and first I'm going to do the PowerPoint, and then we're going to go in the charts. All right. So how do we spot a trend? All right. When we got a candle that's formed over here, we always look left to right, and if the high of number 1 is lower than number 2, these are called resistances, and number 2 is lower than number 3, we have a downtrend. It takes these 3 parts to make a trend. The trend is the most subjective thing we do. Everything else has got anchored by rules, but trends are what you see, and that's why they're difficult. And as trend traders, and you should only be a trend trader as a beginner. As a beginner, you need to be trading only in a trend. Why? Because 80% of the money is made in the trend. 80%. Only 20% is made counter trend. All right? Now, here's the deal. If you can't make money where 80% of the money is made, you're never going to make money where the 20% is made. So as a beginning trader, you always trade with the trend. Maybe a year, maybe 2 years from now, you might be able to trade counter trend. Pip. How long did you spend from beginning to when you made your first counter trend trade? How many months was it? 18 months. All right. So for Pip, it was 18 months. All right. So we'd have them in Slava in the morning. When we're in the New York session, we have about 5 hedge funds in our room. They don't talk. They're trading. All right. Phil, she did 1,252 in one night. All right. Get that? Phil. 1,252 in one night. Mike, just log out and log back in. It's your internet. All right? So everybody's getting sidetracked here, as usual. All right? Now, it's just the opposite. On a support, when we have 1 is higher than 2 and 2 is higher than 3, we have an uptrend. All right? All right? That's it. Phil, don't worry about that. Focus on trends. It doesn't matter what she did. She did 1,252 pips. Period. On one night. Okay? End of discussion. All right? Now, this is very important. All right? Yeah, probably is, Ramil. Resistance. 3 lower highs is resistance. 3 higher lows is support, which is an uptrend. All right? So, this is important for you to understand. It takes 2 points to develop a trend, but it takes a third to confirm. If you only have 2 points, you don't know you have a trend. You may have a trend, but you may also not. All right? So it's important to understand that. 2 points to develop a trend and a third to confirm. All right? So uptrends are when the chart is establishing higher lows and higher highs. And as you get near the end of the trend is your friend till it bends, because it's no longer able to put higher highs. That's your clue that the trend is ending, all right? Or at least this wave in the trend is ending, all right? So how do we do this in an uptrend? It's all about support, all right? Support dictates the trend. We have 1 candle that sticks down with 2 lows higher on the left, 2 lows higher on the right. All right? I didn't develop this. Tom DeMark, one of the most famous traders in the world, developed this rule for what support actually is. All right. Now, if you have a set of twins, which are 2 candles here, then these 2 candles will act as 1. All right? Very important to understand that. All right? So a downtrend is when the chart is establishing lower highs and lower lows. And once again, the trend is your friend till it bends. All right? When it no longer can do that, we're going to go up to the upside. All right? So once again, it's about resistance here. All right? Resistance is 1 candle that sticks up here with 2 to the left and 2 to the right. All right? And if we have a set of twins, then these 2 candles act as 1. I didn't develop this. This is Tom the Mark, folks. There is no other support or resistance that doesn't look like something like this. Now, they can look like anything. They can look like this. 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 This one I have in the middle is perfect. All right? But this world is not perfect. All right? So it can look like anything. The job of the trader is to know what that is. All right? So the market reacts based on support or resistance. They're called bounces, dips, and rallies. And they're extremely, extremely important, all right? Because every support or resistance creates a decision. As the market is coming down to a support, it has to decide, do I bust through it or do I respect it? If I respect it, we're going back to resistance. If I get to resistance, am I going to bust through it or am I going to respect it? And the trend determines the higher probability, all right? So if you're in a downtrend, the resistance that is already there will create a higher probability for a short. Guess what's important to know? The higher probability. What's the highest probability here? The candles are going up, man. You better know what you're doing. Just the opposite. In an uptrend, the support, the higher probability is a bounce, not a breakthrough. All right? If you don't know that, you will continue to trade to the downside and get whacked. And you'll go, what happened? I don't know, the doggone broker stopped me out again. No, you're not a trader. All right? So our business is anticipation. All right? We see this big move here. Anybody want that? That's a big move right there. Well, the chart was telling you way over here it's going to do that. 1, 2, 3. Now, that doesn't look like much right there, but that is resistance right there. Doesn't look like much, but we have 1, 2, 3. We're going down. There it is. Oh, wow, that's amazing. All right, here it is, going up. Our business is anticipation, then reaction. What do we got? 1, 2, 3, and actually we got 4 over here. And what do we get? This whole move. What's the chart telling you over here? Before this happens, the chart is telling you here, we're going up, Emil, we're going up, Mike, we're going up. And the trader who doesn't know what they're doing gets whacked. All right? Your job is to have rules on trades. Now, we only trade the 240 chart. All right? This is the day chart trend. That is sustainable to the upside. Why? Because it's a 45-degree angle. Let me show you what that means. All right? Give me a second here. Oh. Sorry. All right, let me pop this up here for a quick second. All right. Here's how you decide how you figure it out. All right. This is your clock, your watch. All right. Any trend that is trading from 8 to 2 on your watch is a sustainable trend. It's less than 45 degrees. Any trend over 45 degrees cannot be sustained. Any movement over 45 degrees cannot be sustained. So what does that mean? Okay. What does that mean is that while we may have a sustainable trend like this, we're going to have movements that are unsustainable inside it. All right? That's what's key to understand. The trend is sustainable, but the moves inside it are not. All right? That's what it is. If you're going down, it's just the opposite, 10 to 4. All right? So we can see here we got less than a 45-degree angle on the day chart, and we have 45-degree angle here, 45-degree angle here, 45-degree angle here, 45-degree angle here. This is what we'd be anticipating. Now, as a trader, you need to understand the structure of the market. This is a 1, 2, 3, 4, 5 wave Elliott wave, which is typical in the market. We trade the 240. We don't trade the day chart, which means we can trade the 240 up. We can also trade the 240 down as long as we know where that is. We can trade the 240 up as long as we know where that is. We can trade the 240 down as long as we know where that is. And we can look for the next trade to the upside. Your job is to anticipate that whole movement, all right? That's the job of a trader. It's not chasing some stupid indicator. Get that out of your brain. You cannot be successful being an indicator junkie. It is not possible. I've been trading 12 years, trained over 5,000 traders. I've got about 30 traders who are now hedge fund managers or own their own hedge fund. And I'm telling you, that's what they do. All right? That's it. So get it out of your head. None of them are indicator junkies. All right? So let's talk about the heartline because it's going to be very important, and we're going to go in the charts. Okay? So when we have a trend, we got 3 lower highs. We're going to be able to put a channel on here that's got a heartline right here. Now that's very, very important. All right? Very important because there are always 2 parts to a trend: the lower part and the upper part. All right? Now here's what's important to understand about all of that right there. All right? When a trend is being developed, 80% of the time the market will reach the heartline from the top or the bottom. Now let me tell you something. 80% is better than you can trade, folks. That's a statistic you need to know. If I'm going to the heartline, it's an 80% probability. That's better than I can guess. Therefore, I need to know how to do it. All right? So I've got a trend on here, and we're going to go do some trends so you understand it. All right? All right. Here's the heartline. Anytime I was on the bottom going to the top, I have an 80% shot at the heartline. 80% shot at the heartline. Now, when I break, hook, and go up to the top, I now have an 80% shot back to the heartline. See that? Break, bounce on this, I'm going up, 80% chance back to the heartline. All the way up here, 80% chance back to the heartline. Break here, down here, if this trend's going to continue, I have an 80% chance to get to that line. Right? And that's what keeps trends intact, because the big boys trade trends. That's what they do. The only reason they do counter trend moves is to create structure, which allows more buyers or sellers to come in. Right? So you can see up to the heartline, back 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 to the heartline. The heartline is critical. If you don't know how to get that, you're going to be dead in the water on trends. All right? So let's go in the charts now. We're going to spend the rest of the time live in the charts doing trends. All right? So I'm going to do a couple, then we'll open it up so you can ask questions. All right? So we'll take everything off of here. All right. We go up to the 240 chart. Trends are only found on a 240 chart for us. That doesn't mean that a day chart is not in effect. There is a day chart trend on the British pound. Let me draw it for you, and you can see it. There's a day chart trend. Now, first of all, let me understand how you do this. A trend has got to be anchored on a support. It has to be anchored on a resistance, and you have to, when you do that, it's got to prove that they know where the heart line is. They know it there. 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 All right. Can everybody see that they know where the heart line is? All right. Here's the lower half. Here's the upper half. All right. When I'm down in the bottom half, I got an 80% chance of getting there. Of course, they did it right here. When I'm up here, however, I got an 80% chance of going back to the heart line. That's why it's so important to know where this is. Because if you're in a buy and you're up here, and you're going, oh man, it's going to the stratosphere, I'm going to stay in, you're an idiot. Why? Because the chart is set to go 80% back to the heart line. You're going to get stopped out and lose all your profit. Oh, gee, maybe I should pay attention here. All right? Now, inside this are 240 trends. All right? Those are these trends right here, also anchored by support and resistance. All right? Now, let me get one on here. All right. So here's an uptrend. All right, got to prove the heart line. All right, there's a 240 going up. They know it there. They know it right in here. Okay, there's a 240 trend to the upside. All right, then we got a 240 trend to the downside. Can we trade a 240 trend to the downside? Yes, we can. Why? Because this is the day chart trend. We do not trade the day chart trend, but we know where it is. If you're George Soros, you trade the day chart trend. If you're Warren Buffett, you trade the day chart trend. If you're an intraday trader, you trade the 240 trend. All right? 240 trend is here to the downside, anchored on a support, on a resistance, and you got to prove the heart line. They know it here, they know it here, they know it here, they know it here. Can you all see that? So we could trade that down, trade that down, trade that down. All right? Then we get a turn. All right? Now, here's the key. When do we become a buyer? When we got to bounce off the bottom. We become a buyer right here. All right? Advanced traders are buyers here. Yes, advanced traders are buyers here. But newbies are not. And if you're in this room, besides my fast trackers, you're a newbie. Therefore, you have to wait for the break of the trend and the break of support right here. That's when you become a buyer right there. All right? Make that very, very clear. Just breaking the trend line means nothing. Breaking the support means everything after you break the heart line. And that's why that move occurred. Can everybody see why this move occurred? Why? It's called a wide open space with a known target and plenty of opportunity to make money. Bankers trade with 1 to 3 risk to reward margin minimum. They're not allowed to trade below that. You can't go into your boss and say, you know, boss, I had a good feeling about this trade. And he says, did you trade a 1 to 3? No, boss, I just had a good feeling about it. There's the door. See you later. You're not having $5 million to trade anymore. They trade by the rules, right? If they trade by the rules, what should we do? We should trade by the rules, all right? So here's the next uptrend, all right? Can we prove the heart line? Yep, they know where that is. Yep, they know where that is. Yep, they know where that is, okay? When do we become a seller? When we break the trend line? No. When we take the support out. Now we're a seller to the downside. Everybody see that? Rules. There's no other way to do it. You can't guess. I think it's going up. I think it's going down. You don't do that. You have rules that tell you what to do, and knowing if you're on the bottom here, you're going 80% to heart line. If you top out up here, you're going 80% to the heart line, and in this case, they went even further. If you don't exit here and don't take your profit, move your stop, you're going to get stopped out and give either all your profit up, or if you're trading without stop, heaven forbid that you're trading without stops. But if you were trading without stops, you will lose your margin account on that retracement. And that's totally already set by the currency. It's already telling you we're going to do a 1, 2, 3, 4, 5 to the top. It did a 5 to the top. What's next? An A, B, C retracement. Break out of the trend, and now we got a 1, 2, 3, 3, 4, and a 5. Wow. See that? Now, if you don't understand that, and you don't do it this way, and here's what most traders do. Let me take this off, and let me show you what most traders do. All right? Because I used to be one of these most traders here. Here's what they will do. They'll go along and say, oh, here's the trend right here. That's the trend. That's not the trend. The trend that's the bottom half of the trend. All right? Where's the top half of the trend? The top half of the trend is coming out here equally out there. That's the heart line. And when it breaks up inside here, you go, oh man, what happened? Oh my God. Well, because you only had half the trend on because you're not doing it correctly. All right? All right, I'm going to do one more and then we'll open up for questions. All right? So let's pop open another chart. We'll do something like, let's do the EJ. I love the EJ. It's my favorite currency. All right? Up to the 240 chart. All right. I'm up here, okay? So here's the deal. We only care about this last piece right here. This is what we care about, that. But we have to get 3 points, and we have to be less than 45 degrees. If I make a trend like this, all right, everybody see this trend right here? Can I make the trend here? Let me just redraw that. All right? We only care about this last piece. So if I draw the trend this way, heart line here, and this way, is that a good trend? No, it's not. Why? It's greater than 45 degrees. It can't be the trend. All right? Now, it's the movement inside the trend, but it can't be the trend. All right? I got to find 3 places, and I got to go back in the past. This is why it's critical. So I'm going to scrunch this up, and we're going to go back in the past, and we're going to find 3 places. 1, 2, 3. We're going to go down the lowest chart, and we're going to go back here, and we're going to attach this, and we're going to see if they know the heart line. And everybody see? There's the heart line. There's the heart line. 1, 2, 3. Yeah, but why didn't you go back here? Because they're not doing that now. This is what they're doing now. See how bad you can get it? All right? Now, because I know that the heart line's proven and I've got it anchored on support, I know that that is a good line to shoot for. If I don't have this up here, I don't know that that is correct. You see that? Everybody see that? All right, you can open it up, Pip. We'll stop. All right. And everybody see that? There you go, Steve. Okay. All right. And this is what happens to traders. Thank you, Jetta. This is what happens to traders. They don't know how to put a trend on. They go over to Forex Factory and they try to learn how to do a trend. That's not how the banker does a trend. The banker is looking at a big move. He ain't looking at that stupid little stuff we do. He's looking for big moves. All right? Yeah, never use an Andrews pitchfork. We got one on our charts. We don't use one. All right? Now, we now know that should we get another move to the downside, a square up in here and a turn to the downside, we got 1, 2, 3, 4, 5, 6, maybe 7 T30s to the downside. If it goes slow, we may get 8, 9, 10 down in here. All right, those are T30s are 30 pip targets. That means there's 300 pips to down here. All right. If you get a trade on in here and you know that's the bottom, why would you ever click it off for 300? Yes, absolutely. Because the pitchfork form fits it, YK. It form fits it based on what you put on. All right? That's not the same. You've got to figure out what the trend actually is, not what an Andrews pitchfork says. All right? You've got to find what that is. All right? You put the lower line on a support. You put the lower line on a support that proves this heart line. If you can't prove the heart line, you keep moving this. Maybe it's up here. Maybe it's over here. Maybe it's over here. Maybe it's over here. Maybe it's down here. I don't know which one it is. Now, after you do 20, 30,000 like I have, I see them instantaneously. All right? I instantaneously see them. All right? But that's because I've done so many. How many trends you got to do? You got to do 300 down all at one time, and you got to take 24 hours off. Then you got to do 300 up, and then you got to take 24 hours off. That's called reticular cognition. No, it isn't. Regression. Never use regression either. Regression is form fitting. Regression takes whatever candles you have and it adds them in. See, if I do that right there, it says you're at the bottom of the trend line. I just put regression on. That's not correct. That's not correct. The support is over. Oh, sorry. Let me get rid of this. The support is over here for this move. See that? Never, ever, 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 ever use an Andrews pitchfork or linear regression. Ever. No, it's a channel key. It's a channel key. It's standard on every charting software in the world. Even MT4's got it, and MT4's a piece of crap. All right? We can do a million of these. I mean, in fact, that's what you need to do. You need to take your channel key on your charts, and you need to do 300 of them. There's the bottom, right there. There's the top. Right here, let's see if we can catch it right there. That's one more over. All right. Now, I'm going to pop this up big so you can see it. Now, look at when I have an auto scale, I'm going to auto scale this. Can we see that this is 45 degrees? That's 45 degrees. 8 to 2 on a clock. Everybody see that? 8 to 2. 1, 12, 6, 7, 9. Everybody see it? It's great for entering trades. It's not good for using the charts. The charts are worthless, James. Right? Now, that's what I'm trying to explain. When I have it auto-scaled, it shows me at 45 degrees. Now, I'm going to make this bigger so we can see that. Look what happens when I make it bigger. It's no longer 45 degrees. That's why you have to be aware of that. Okay, now that's not 45 degrees, but if I auto-scale that, that's 45 degrees. Bankers trade 45 degrees or less trends, and then once they get one built, they want to run it. They want to run it from the bottom to the heart line, back to the bottom, up to the top, back to the heart line, back to the top, back to the heart line, back to the bottom, up to the top, back to the heart line, up again, back to the bottom, up to the top. This is what they want to do because they want to keep this trend intact. Why? Because they're looking for 1 to 3 always, and always trading the waves. Yeah, you auto scale over here. Right here, auto scale, and it puts it exactly the way it's supposed to be. Do you consider or believe price consolidated, price back? Now, we're target traders, Robert. We don't get involved in that. We find the target and find ways to trade to the target. Because when the big boys are trading to a target, we can find their targets, and we know what their waves are going to be. They're going to do a 1, 2, 3, 4, 5 to the top. See? Then they're going to do an A, B, C. Now we've got to make a decision. Are we going to do a 5 waves to the top or 5 waves to the downside? See that? It works on all markets. It's standard for professional traders, Camilla. It's the standard way they do it. The problem is that retail traders don't learn from professional traders. Who do they learn from? Forex Factory. I'm going to download a DVD. I'm going to get me a CD and figure it out. See? That's what happens to traders. Right? So I'm going to blow this up, and I want you to see, I'm going to prove to you that what we do is correct. There's the bottom, there's the top. There's the heart line. Did they know where the heart line was? 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 You see that? They knew where the heart line was. Therefore, this bottom line is right and this top line is correct. Therefore, I can count on this trend. All right? Okay, thanks, Pip. All right. But Ephraim, we're here to learn tonight. You're not here to learn this software. All right? See that? You guys are getting sidetracked. Do you want to learn to trade, or do you want to talk about yellow lines on the charts? All right? You're here to learn. We're here teaching you. Costs you nothing. We made 40,000 pips last year. All right? Tonight's night, on Monday nights, we focus on one thing, and we nail it for an hour. That's our job. And we did a half an hour on review, which we never do, but we did that tonight because you guys were here. All right? We're focused on trends. We're going to be done, we're supposed to be done here in about 12 minutes, all right? And we're not through where we're at. Why? Because we're going off in the ditches. Because everybody wants to talk about everything except what the topic is tonight, all right? Now, you need to be a good student so that I can be a good mentor, and I can help you, but if you want to go off in the ditches, go to Forex Factory, all right? Because that's where the ditches are, and you'll never learn it. You've got to focus, folks. Learn what the market does. I'm trying to prove to you this is what the market does. All right? I'm going to do another one. All right? We'll take the Aussie off here. Take everything off the Aussie. All right. Aussie's had a real strong movement to the downside. All right? As you can see. Let's go see if we can get the structure here. We got a 1, 2, 3, 4, 5. All right? Then we got an A, B, C retracement, and then we got a truncated mess down in here where they try to figure out what to do. They finally figure out to do, and we got a 1 and a 2, and we go nowhere. We're going sideways. All right? So the question is, what is the trend here? All right? So what do we care about? We care about the last piece. We don't care about this up here. This is what they did last week. This is what they did the week before. This is what they did the week before. What do I got to trade? What they're doing now. This is what I care about, is this piece right here, not this crap back here. All right? So what does a normal trader do? Here's what the normal trader does. Yeah, man, that's it. That's a trend right there. Not even does that. That's even bad. All right? This is the trend. I got it. I'm good. They form fit it. That's not what it is. All right? What it is here. The trend is here, down to here, back here, find the heart line. All right? See how I immediately knew to go down here, not that one? Why? Because I've done 30,000 of these. Therefore, I know the heart line is here. I know that's got to be the support. All right? There is the resistance. There's the support it's anchored on, and it proves the heart line. That means right here, if I get a sell, what's my percentage chance of going to this line right here? Everybody should know that. What is that heart line percentage? Come on, 80%. All right? If you get a sell here on a break of this flag, right here, the chart tells you you have an 80% shot at that trade. Now, I don't know how long. Here's what I don't know. I don't know if it'll go in 2 hours, 2 minutes, or 2 days. I don't know how long it's going to take. But I know where it's going. It's going to that heart line 80% of the time. That's better than Scooby can trade. That's better than Mike can trade. That's better than Harry and Glenn can trade. See that? It's a channel key. Sylvester, it's just a channel key, all right? But most people use it for channels, all right? Now, if I got an 80% shot at this trade right here, and it breaks to the downside, by the way, I'm already in this trade off of this. I'm up quite a few pips right now, about 45 pips. Why? Because I got an 80% chance of the heart line. That's why, all right? If I get a shot at this trade to the downside, draw it here, all right? Down here, 80% is 1, 2, 3, 4, 5 T30s. That's 150 pips. All right? Now here's what the average trader will do out of that. It'll go down here and they'll pull back up and they'll freak out and they'll go, I'm clicking out, and they get 5 to 8 pips. The professional trader goes, I'm going to the heartline, and he gets 150. Do you see why the professional traders make money and the retail trader does not? They don't know what they're doing, right? Yeah, you're going to have some moves on it. Exactly right. You got to have three lower highs. 1, 2, 3, right here. You got 3 going straight across here. You got to have 3. 1, 2, and 3 to prove that that line is correct. Once you know this line is correct in a downtrend, and you've proven that they know where the heart line is, then you know this line down here is correct. And once we break through the heart line, there's our next opportunity to the downside. Everybody see that? This is why trends are hard. They look easy, they're hard, folks. All right? Yeah, but I'm only taking the piece they're doing now, Bill. That's a good point. All right? But here's the deal. I am not going all the way back to all this crap up here. See? I don't need all this over here. Because you see what happens? This is what they're doing now. You see the angle there, Bill? What's the angle here? Is that 45 degrees or less? See that? Is that channel right there 45 degrees? No. See, so it's not correct. And see, when they make the turn, we got to make the turn. It's important that traders do the adaptation. Right? I don't need to. I'm not trying to show that, but I'll do that. I'll just auto scale for you. There it is. It's down at the bottom now. See that? So I'll bring it up. There's 45 degrees. All right. So what's the rule? 10 to 4. All right. There's 3. There's 2. There's 1. There's 12. There's 11. There's 9. There's 8. There's 7. There's 6. 5. Everybody see it? What is it? 10 to 4. All right. Could be. I don't know. We're not dealing with that, Rick. We're dealing with trends. Not dealing with fibs. Not doing that. Trend is 45 degrees or less, Rick. All right. And the more shallow it is, the worse it is to trade. All right. The worse it is to trade. The steeper it is, the harder it is to trade also, because a steep trend is unsustainable, which means they've got to pull it back and get it into a 45 degrees, which is why we get these movements that go up, down, up, down, up, down. All right? That's greater than 45 degrees. 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 But that is 45 degrees. You see that? And where are our trades? In a downtrend, our trade is here. Our trade is here. And our trade is here. You see that? But here's the key. Since it's going to retrace, we need to know where that target is. We need to know where that target is. We need to know where that target is. See that? If you don't know where that target is, you don't move your stop at the correct place. It bounces off of there, stops you out, or you give back all your profit. Can everybody see that? Moises, here's where the best example is. Go do 300 up and go do 300 down. That's the minimum. When you do 300 up and you do 300 down, you don't have the question anymore. See, what happens to traders is, and let me get on your case a little bit, traders are stinking lazy. They're absolutely the laziest people on the planet. All right? You've got to go do the work. The minimum, ante into the game, is 300 of everything. That's the minimum. You need 1,000, 2,000. All right? So if you want to do bear flags, how many does it take? Minimum is 300. How many you need? 5,000. But the minimum is 300, all done at one time. You want to do bull flags? 300 of them. That's the minimum. How many you got to do? 5,000 or 10,000 of them. See? All right. So here's the problem. Traders don't want to do that. I want to trade some stupid little indicator, man. I trade the moving average crossover. That's what I do. And they get whacked. All right. So what did I do? I anchored it on a support. Can we see that? 2 candles to the left, 2 candles to the right. I anchored it on resistance. 2 candles to the left, 2 candles to the right. And have to prove the heart line. Do they know the heart line? Do they know the heart line? Do they know the heart line? If they know the heart line, they know this line. See that? There you go, Carlos. Yeah, there's Carlos. 650 bit. Carlos is doing well. All right. It's work, Moises. There is, see, I can give you education. I can sit in here for an hour, hour and a half every night and give you education. I can't make you do the work. And the work is experience. And you cannot become a trader without experience. How do you get experience? You can't get it live. You don't get enough. You do not get 300 trends live. You've got to do it in the past. All right? There you go, Kim. See? You have to go do it. What are traders? Lazy. I know you're lazy. Why? Because you want to go trade the Forex, make equal to or more money than you make in your regular job. You don't want to drive an hour to work. You don't want to drive an hour home. You don't want to drive 10 to 12, work 10 to 12 hours a day for the man. You want to be a trader, all right? What do you want to do? You want to beat the system, all right? You don't want to work that hard. But let me tell you, when you come over to the Forex, you're going to do an 8-hour job. That's what you're going to do, an 8-hour job every day, because you've got so much work to do, 300 of everything. There are 24 patterns. 24 patterns times 300. Think how many days that takes. It takes 1 day to do 300 and 1 day off. That takes you 2 months right there, just doing patterns. That's not talking about channels. That's not talking about fibs. That's not talking about HSIs. No, it's a channel key, has it built in, Jim. That's it. But yeah, you're dealing with a blank chart. Here's your chart. That's your chart. You got to make sense of that chart. What is it doing? See, that's what you got to do. You got to make sense of that chart. And when you get it done, that's the Aussie dollar. This is what they look like. See, that's what they look like. All these lines on here. Euro yen. When you get it right, all these lines on here. What's the trend look like here? See, notice I only took these 3 points here. Notice that? I didn't go back there. I don't need that. I need 1, 2, 3. That matches the rules. The rules are 3. I got to prove the heart line. 1, 2, 3, 4. Do they know the heart line? Therefore, they know that line right there. Have we been trading this? This is our trade. We traded. This is the trade today. We missed this trade because everybody was asking stupid questions. Now, actually, let me retract. They weren't asking stupid questions. They were just asking questions they didn't need to be asking at the time. Now, let me rephrase that. All right. So we missed this trade this morning. All right. So the 100 pips we missed right here. All right. Over here in the GJ, there's the trend to the downside. Look at all the lines on it. Well, there's so many stinking lines on there, man. How do you make sense? That's because that's the trade right there. All right. There's the trade. What? Is that 10 to 4? Yes. There's the wide open space. Where's the bottom? Right here. Did they prove the heart line? I know where the heart line is. I know where the heart line is. I know where the heart line is. See that? That's how you find where the trade is. If you don't do it correctly, you will not be successful. All right? I'm showing you how to do it successful, but I can't make you go do 300 up, take a day off, 300 down, take a day off. All right? There's 4 days right there just to practice trends, and you've got the ante into the game. You only have the start. You need 2,000 to 5,000 trends under your belt. All right? How are you going to get 2,000 to 5,000 trends? All right? How are you going to do it? You got to do them in the past. You have to paper trade them. The only way to do it. All right? Yeah, Morgan sent a nice email out asking everybody to please just be listening, take advantage of it, of the time you get here. But evidently, again, also traders don't read. No, we know all about traders. See how fast I did that? Bam! I nailed it. Why? Because I've done 10,000 of them. I knew to go to that one, and I knew to go to that one. And what did I get? Do they know where the heart line is? Yes. What's my opportunity? Right there. My job as a trader is to find the opportunity. Your job as a businessman is to find the opportunity in your business, and then to maximize that. Well, you know, I sell copiers. Okay, you sell copiers. How do you sell copiers? Well, you know, the best thing to do would be find a company that needs like 20 copiers. All right? See, that's the opportunity. How do you do it? You got to work and find the customer that has needs 20 copiers. See, it's no different. This is a business, folks. If you treat it as a hobby, it's going to be a hobby. If you treat it as a business, you can do well if you will do what it takes to learn your business. Treat it like a doctor does. A doctor treats his business the same way. He goes to 4 years of school, then he does 4 more years of medical school, then he does 2 years of residency, and now they say, okay, you can put an MD behind your name, and now he's still not allowed to look at a patient with a cold unless there's another doctor with him. He takes 10 years, has $500,000 worth of debt, and now he's a doctor, right? And that's what happens. What happens to trader? I don't want to do that. I don't want to spend the time it takes to learn to be a trader. I want to follow an indicator. I want to just give me that moving average crossover, man. That's what I want, moving average crossover. And what do? They fail. They get whacked, right? So, all right. So that's it. All right. Now we like to keep these to about an hour if we can, so that the recording is not too long for people. But we will open up to questions about one thing: trends only. I don't want any I won't answer another question unless it's about trends. All right. You ask another question, I'm not going to do it. Our lesson tonight is trends. This is not for you newbies. This is for our traders who are with us. There are 500 traders with us day in, day out. All right. This is for them. You are invited in to help watch. That's what you were invited to do. All right. So watch. If you've got a question about trends, I'm going to answer it. Okay. All right. Opened up, trends only. Ask the question, and we will answer it to the best of our ability. All right. Support and resistance show the trend in the past. Okay, so good question, Don. Who was it? John. Okay, remember, John, what do I got to have? Rules. 1, 2, 3. 3 points to the downside, lower highs, make a trend. I have a trend to the downside. I got to find a support that will prove that heart line. If I prove that heart line, then there are 2 parts to every trade. The trend, the upper part and the lower part. We are in the lower part. We are still 100 pips from the bottom. You see that? You might be able to tune this on. I'm sure you could. It's hard. Everything is hard on MT4, but it's probably, huh? See? Now, if you follow these rules right here, suddenly trends become less subjective. Way less subjective. All right? What is an anchor? It's got to be, an anchor means it sits on that thing. It's like nailed to that. Think of it as somebody took a nail gun and nailed it to that. Right? Because that support tells them exactly where to turn here. That heart line, by the way, told them exactly where to turn here. That heart line told them to turn here. That heart line told them to turn here. This heart line that they broke said bring it back up and then break off of it. You see how the heart line was the key. So the trade off the top was 80%. That trade was an 80% trade. That was an 80% trade. That was an 80% trade. You see that? Those are 80% probable trades. There are 1, 2, 3, 4 of them there for about 150 pips apiece. So those 4 moves right there would have made you almost 500 pips. Can you see that? Almost 500 pips. And all you had to know was, what is the real trend? And what's my percentage chance to get into the heart line? Now, once I break to the bottom in here, now my chance is going all the way to here. Once I hit here, what's my percentage chance of going back to the heart line? Open that up, Pip. What's my percentage chance of going back to that? What's my percent? 80%, all right? Now, if you're in the cell, right, and you're down here in this lower area, do you think it would be prudent to protect yourself because the trade has turned from positive to the downside to 80% chance of turning to the upside? Move stop, right, Bill? Move your stop. If you don't know where that is right there, because I didn't want to put that many lines on my charts, man, right? Because I didn't want to do the work, you're going to either give it up or you're going to get stopped out. See that? That's it. That's why it's important to know. All right? What's the quarter line beside the hot line? Quarter line. I don't even know what you're talking about. Oh, these lines in here, I just divide my channel in 4 equal parts. That's all. 1, 2, 3, 4. I need to know where I am in the move. I'm a trader. See, I'm a trader, and I need to know where I am. Where am I? There are 4 parts to every move to the downside, 4 parts to every move to the upside. I need to know where I am. Am I in 1, 2, 3, or 4? All right, very simple. All right, this is just basic trends, folks. This is not advanced. When I do trends with my fast track traders, our first day we do trends. It takes 3 hours. 3 hours to do trends. That's exactly correct. No, it's 30% of the time. They only trend 30% of the time. Bill, charts only trend only 20%. No, they only trend 30% of the time. 70% of the time they're either retracing or going sideways. All right? And that's what's wrong with a moving average crossover, because a moving average crossover is a trending trade. And that means it's only going to work 30% of the time because the market's only trending 30% of the time. What do you do the other 70% of the time? If you trade a moving average crossover, you're going to get whacked. See? That's the problem. All right? And that's what happens to most traders. Where do we learn? I mean, I was a beginner like you guys. I learned to scout for 5 to 8 pips and learned to move an average crossover. All right? All right, so let me go back up here to some questions. Okay, I think we got them there. Okay. Where can you trade away from the hard line and when towards it? Well, Max, we only, as newbies, good question, Max, by the way. As newbies, you only trade with the trend. So you would trade that trade to the heart line. You would trade that trade to the heart line. Once you break the heart line, you're going to trade it to the bottom. Right? Then you're done. You're done. This trade right here is not for you. There are traders who can trade that, and they are in this room right now. Right? They are here because this is an advanced class. They will make that trade. But they've been trading for 2-3 years with us. Right? So they know how to make that trade. As a newbie, you never, ever make that trade back to the heart line. Right? So good question, Max. And yeah, it is, Michael. What's between the difference between the upper and lower channel, and can you apply that to the higher and lower time frames using that? No, you can't, Trader 5. And the reason for that, by the way, we like your first name, Trader 5. As I'm sure Trader is not your first name, and 5 is not your last name. All right? We like names because we like to call people by their name. All right? So the next time you log in, please log in with your name. All right? So what is the deal? It's to know where we are. We have to always understand structure. And if we look at our acrostic, which is trade for pips daily, there are 4 pieces to knowing whether you can make a trade. This is only the very first piece, the trend. Once we determine the trend, we now determine whether we're a buyer or seller. If the trend is down, we are a seller. If the trend is up, we are a buyer. We are never the opposite of that, because only 20% of the market, only 20% of the money is made counter trend, and the 20% is only made by professional traders, and occasionally a retail trader who gets lucky. Right? So that's why. Right? So down on the lower chart, they are not trends. Now they're channels. Right? So let me prove that to you here. We are actually doing a channel here. We're doing a channel right now to the downside. Right? That's a channel to the downside. Prior to that, we were doing this channel right here. Let's see this. Right? And the market moves in channels also. Channels is a whole nother lesson. Right? That's a whole nother lesson. And we trade channels. Right? We got a channel over here. Let me find it here. The channel is on the end. Hold on. Let me find it real quick, and you'll see it pretty clearly once we get it down here. This is a falling wedge right here. All right? Don't forget, everybody. This is a trade to the downside. We've got a set of twins here. We're looking for this trade tonight. That's the trade tonight. Was a session recap this morning. Don't miss that trade. All right? That's a falling wedge. Got to do 300 of those, by the way. Where is the channel? There we go. Here we go. All right. So here's a trend to the downside. Let me auto scale this. All right. 45 is a little steep, and there's the channel. Once they start working a channel, they will work that channel. Here's a false breakout of the channel and a move back into the channel. The move into the channel was a trade of 60 pips. See that? Now, if we break this, inside the channel, we're doing a channel inside the 240 trend. Can everybody see that? That's a high statistical probability. What's it running along right here? What is this right here? Can anybody tell me what that is? What is that? Everybody see what that is? What is that? A heart line. Do you think they know where it is? What do you think? Oh, doggone it, he's so lucky. Look at that. He just guessed that doggone heart line again. That's how important the heart line is. All right? The heart line is critical to trends, folks. And if you're trading to it, you got an 80% chance. Talk about when you can't find a trend, because when you can't find a trend, it's either trading in a box, which we have a way to trade, or you walk away from the currency. Right? And the reason there's a heart line is because there's equilibrium in all currencies. Right? Right? Just a little bit more advanced equilibrium is when the market is. I'll find you one here. Hold on. Anybody remember what the box was? Where's the box? Oh man. I hope everybody caught this trade here. Does everybody remember this from this morning? Euro New Zealand up to here, didn't quite get there. It went 1, 2, almost 3 T30s. 70 pip trade, session recap. All right, see that? 70 pip trade. We were waiting for that this morning. Go watch the recap. You'll see us say, that's the trade we want. Don't miss that trade. 70 pips there for everybody who paid attention and got that. All right. Let me find the box here. Hold on. Where is it? Swissy. Give me a sec. I know I got one in here. All right, here's one that's trading the box. All right. So although we have an overall trend to the downside here, can everybody see we're trading in a box here? We're trading in a big sideways movement. That's a ranging market, okay? We're looking to make this trade, and that trade's already underway for those who are in here for that trade to there, right? All right. So when you can't find it, in this case we do have a trend, but the market is not doing the trend, it's doing the sideways movement, all right? So we know how to do that. We're going down here, all right? Now if we break this, where are we going? What's my percentage chance right in here? %. If that breaks this line right here and heads to the downside, it's got 1, 2, maybe 3 by the time it gets down there. 3 T30s, which is 90 pips. All right? There's a potential trade of 90 pips, which is 80% statistically going to make that trade. If you knew that, and you knew there that line was, would you have confidence to make that trade? Would you have confidence to make the trade? Yes, 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 yes. Are you trading it because you think it's going down? No, that's not why you're trading it. You're trading it because I got an 80% shot to the heart line. If I can break the support, which is holding it up right now, and it doesn't bounce and continue doing the box like this, if it doesn't do that, that's the commitment to make the trade to the heart line, which is an 80% trade for 90 pips. Duh. If it walks like a duck, quacks like a duck, looks like a duck, it's a stinking duck. That's it. Beth, the stop for you never changes. It's 5 to 7 pips above the last support or resistance on odd number 3 or 7. Just memorize that. 5 to 7 pips above the last support or resistance on a 10-minute chart on an odd number 3 or 7. That's all you need to know at this point in your career. All right. Now, channels are found on the lower charts. Trends are found on the 240 chart, Jay. Trends are found on the 240 chart. Now, they're found on a day chart also, but the guys who trade the day chart trend are trading a different method. They're trading position trading and swing trading, and their names are George Soros and Warren Buffett, and they got $40 billion in there, and that's how they're trading, and they don't care if it gets here this week. They're wondering where it's going to be by June. See the difference? Their mentality, the reason they're trading is not where we're at. We don't want to trade with those guys. We want to trade with the guys who are trading today for the money that's available today. That's an intraday trader. You see that? So trends are only found on a 240 chart, but channels can be all the way down to a 1-minute chart. Sam, because Aussie is being driven to the downside. Aussie dollar is being driven to the downside. And the Euro Aussie, let's go find it, is showing us it hasn't broken out yet. All right? And by the way, can you all see? All right? Why would you want to do that? Why? Because the chart says we're going to break this and we're going to try to go to that number. That's why. All right? So what happens is the traders get so myopic about, oh yeah, but that doesn't work out because the correlation is wrong. Correlation is not 100%. All right? If you go look at the correlation, it's only about 80, 82%. That's all. All right? That means it doesn't. If it did 100%, I wouldn't do it. But it doesn't. The chart says you're a buyer above this line to here. And I talked about this morning in the session recap. Go watch it. You'll see. If you break this 6,700, you want to make the trade and you want to target 6,808. Go watch it. You're going to see it. It's already done 70 pips. All right? See that? Already done 70 pips of that move. All right? Why? Because the chart said it's going to do it. I don't care about what the fundamentals say. I don't care what the correlations say, except for the U.S. dollar and the euro and a dollar Swissy. Those are the only correlations I care about. I care what the chart says. The chart is El Jefe. The chart says we're going to do this. I follow the chart. The reason I survived 12 years in the market is because I follow the chart. I don't listen to people. I don't pay attention to people on Forex Factory. I pay attention to what the chart says. And I understand what the chart is telling me. And that's what I'm trying to teach you. Right? And that's what I teach my traders day in, day out. Day in, day out. Can we see why this didn't make it? I can show you exactly why it didn't make this. Can everybody see this line? All right. You see that? It's actually a little higher here, to there, to there. That's why. See? That's why it didn't make the target, because of that line right there. What is this? That's a channel inside a 240 trend to the upside. 70 pips for the trader who followed the chart. It was 5 to 8 pips for the dumb money, and it was nothing for the person who says, I'm not going to trade the euro dollar against the euro Aussie against the Aussie dollar. See, that's the problem. We follow the chart. We listen to the chart. We pay attention to the chart. The chart is El Jefe. Okay? All right. When would you enter? We enter on a RF 1010 on a 10-minute chart, Franco. But here's what happens. Traders are always looking for the trade. Don't look for the trade. Look for the structure. The trade becomes evident if you look for the structure. And I get this question every single day, 40 times. When would you enter? You enter when the chart proves that it's going to make that move, whatever that happens to be. As a beginner, you use an RF 1010 for us, okay? As you become an experienced, you never use an RF, well, you use an RF 1010 to double your position, all right? We follow price action. We follow the chart. The chart tells us exactly how to trade it. We follow the chart. When you learn to read charts and trade with the charts, you will be successful and you'll be able to knock down pips like crazy. Let me just show you an example of that real quick and then we'll end up. I'm going to show you one of our traders' trading record. All right? He sent it to me. I want you to see, not risking any more than 3 minis here. There's 7,000 pips. Still in the trades. Still in the trades. All right? That's how you make money. All right? That's how you make money. Right there. What I just showed you. Sorry, let me put that back up again. Staying in trades, building positions, adding to it with scouts, starting with small positions and building positions over and over again in big, wide open spaces, not bailing on trades, knowing where the currency is going to go, and follow the charts. Don't think. We don't have room to think in this market. We think the time to think is before the market moves. Once the market moves, we react with the market. We follow the market, whatever it tells us. All right. All right. Let's close this down. Thanks for being here, everybody, and we'll see what happens here. Thanks for being here. Hopefully, all of you who are new here, we wanted to invite you here because you're only going to be here for a week, and we wanted to let you know what we do every Monday night. We try to nail something, and we don't. Once you're not a newbie and you're in here, we don't get off track. Only newbies get off track. There you go. Morgan's back. Thank you, Morgan. Morgan, if you're welcome to take it over if you want to. All right.
Great. Thank you, Scott. We appreciate you opening that up to our room as well. And guys, what we'll do is we'll be back for more live trading tomorrow morning.